With me now from the Canadian Real Estate Association is senior economist Shaun Cathcart. Shaun, good morning. Glad you could be with us.
Thanks for having me.
All right, so let's begin with the statistics out today. Home sales slowing once again in July. This is the 5th month in a row. What does that mean for the market?
Well, it's really not that surprising when you see what's happened with borrowing costs. That's the main factor here, and really the main factor is inflation and what the Bank of Canada has to do to get that under control. So not a big surprise to see sales falling. The good news is that it's slow, that it's a deceleration in that trend. So the decline in July was smaller than those in June, May, April, and March. And so if we're looking for a market that's hopefully coming in for a landing pretty soon, that's a good sign.
Let's break it down. What area or province saw the most decline?
It's mostly centered in Ontario, certainly places where property is the most expensive. So if you got borrowing costs going up, places where people are going to be hitting up against that stress test, Ontario and BC for sure. Both in terms of the decline in sales and the sort of edging back, giving back a little bit on the price side of things. Very much Ontario, BC. In the Maritimes, prices are actually still rising in more affordable markets, obviously going to be less affected by higher borrowing costs.
So, Shaun, what does this mean for first-time buyers, people who want to enter the market for the first time?
Well, it's gotten a lot tougher if you're looking to take out a big loan, because it's gotten a lot harder to pass the stress test and borrow money. I think the good news is that where we are today is probably near the top. I think the Bank of Canada is going to finish off their last 100 or so basis point rate hikes, which has been known since March, and then get to sort of 3.5 on the overnight rate and stop, which means that 5-year fixed rate mortgages probably aren't going to go up that much more. If any, the financial markets are actually expecting that maybe by this point next year they might be going down, rates that is. And recent North American economic data shows that a lot of the sort of big players in the inflation story, prices there are going down: oil, wheat, etc. So I think we're going to be coming in for a landing pretty soon here. Okay,
and we're talking about sales, and you just mentioned prices as well. They've dropped by 5% in the last year. Do you expect that trend to continue as well, Shaun?
Well, we'll see. I mean, one of the big pieces of data that came out in July was a big drop in new listings of homes for sale. And so we've already got still a record low, or almost a record low, number of properties on the market. That problem hasn't gone away. And it looks like it's not like sellers are flooding the market with listings trying to get rid of these places. People, for the most part, the vast majority of people owe far less on on their mortgages than their places are worth today. Unemployment rate is at almost a record low. And so you got the sellers going to the sidelines now too. So everyone's just going to kind of hang out there for the summer, I think. We don't have an unbalanced market at all. So I think that the slide in prices, which is mostly confined to Ontario and BC, is going to sort of level off and sort of find a bottom pretty soon.
Shaun Cathcart, thanks so much. Appreciate it.
My pleasure.